if you're listening to this and you haven't done this yet, you really got to think about buying a business. Now, there's two ways to do it, which is with money or without money. And as shocking as it sounds, you absolutely can buy a business without money. But I do want to tackle the with money first, because there are people that are like, well, I don't have money, I can't buy one. But this is where SBA loans come into play. And there's a change now. So Jessica, would you mind just sharing with everyone, what is an SBA loan? Who can get one? How can you get one? And what the hell is the change?
Yeah. So SBA is a Small Business Administration, and they have a loan program. It's a guaranteed loan program. So the SBA doesn't loan money themselves. They have in very specific situations, but not to buy a business, right? But what they do is they provide a guarantee program to banking and lending institutions that if I take out a loan to buy Adam's business and I default on that loan, the government, the SBA, will reimburse the bank that lent me the money, typically around 75% of the loan value. So it's a really cool program that we have in the U.S. It's very unique to our economy. And if you think about it, it's great because it removes the risk for the banks, right? If someone's buying a business and there's a lot of risk to it, now that risk of them defaulting is going away 75%. So it powers a huge percentage of the small business sales in the U.S. And there's been a couple restrictions on SBA loans that have now been removed, which is what we're going to talk about. That is really, I think, going to change the name of buying a business. So the first restriction was that when you used an SBA loan to acquire a company, you had to acquire 100% of it. So the owner could not stay on as an equity partner. You could not take a percentage of the business. And now you can use the SBA loans for partial sales. Like, this is probably the biggest change in SBA loans that's probably ever. The second big change is the other reason a lot of people didn't use SBA financing in the past was that there was restrictions on how long and in what capacity the past owner could stay on, the seller could stay on. So in the past, they couldn't stay on as an employee, they couldn't stay on as an owner, like we just discussed, and they couldn't stay on as a contractor for more than a year. So if the business was tied to them, that was very problematic. Now, look, I know of some deals where owners stayed on more than a year. Like, I don't legally know of any of those deals that happened in my office, right? But so now the SBA, and the reason they did it was because they wanted the buyer to have full control of the business. They owned 100%, right? They didn't need the seller in there mucking things up. But they realized in practice, it didn't work. So really the way around it now is with these partial sales, you can have the seller stay on in an equity position, especially if the business is tied to them. And so it gets around that whole, I want the owner to stay on, I need their help to run this business. So it's really solving two major problems that we saw in the SBA loans. And then the last is kind of, and we'll talk a lot about seller financing, is the restructuring how seller financing is treated. So in the past, if you had an SBA loan and you had a seller note, in most situations, not all, you couldn't make payments as a buyer on the seller note until the SBA loan was paid off, which made the seller note way riskier for a seller, right? Because they're like, hey, I'm not going to see payments for 2, 5, or 7 years, whatever the term of the loan is. And now there is a way, as long as there's some debt capacity and the profit of the business can cover the payments, that you can pay both off at the same time. So there is a way now to stack capital with seller financing, SBA loans, seller equity, where you don't really have to put money down as a buyer.
Is it better to cash buy a business, to SBA loan a business, or to seller fund a business?
So I think the ideal deal structures, you use all three, right? That's ideal. So most buyers, like when we look at all the deals we do, most buyers don't put down more than 20 or 30% ever. So it's usually that or less. But like when I was talking about capital stack, most deals come together where, say there's 10% buyer cash down, 10% seller financing that's used towards the down payment, and then 80% SBA. Things have changed a lot in the last year, right? Right now, actually, seller financing is more favorable than SBA for sellers because the interest rates are so high, right? So you're seeing that shake up a little bit more, but I think it is, in the ideal perspective, is to use all three. Now, if that's not available, as a buyer, I think the best is to use seller financing, especially now. Like, it would have been a different story. Seller financing did get a bit challenging when the banks were doing interest rates at like 5%, right? And so then as a seller, you're getting a 5% interest, on what's perceived a risky investment. Now, the banks, I think the last SBA interest rate I checked was like 11.5%. So even if we're discounting the rates on seller financing a little bit, like the seller's still getting 8-9%, that's like a really good deal, right? And as a buyer, yeah, and they love it. And it's a win-win for everybody, which makes it a win for a buyer. But yeah, I mean, a lot of the deals we've done personally have been with seller financing or earn-outs if you want to get a bit more sophisticated. But that's the first go-to, I think, in your capital tools.
Yes, so valuable. Like, everyone listening to this, like, this is something you have to do. Now, I always tell people my favorite business to buy is my competitors. I actually love going after competitors because I expand the size of my business by theirs. So I'm increasing my market share, my weight in the market. So in your experience, would you say that that's a good strategy? Is diversification better? What have you seen, and what do you feel?
I think when you're growing through acquisition, one, you want to understand your goals and what you're willing and not willing to do as an owner, right? Like, we expanded through our competition, but we also went into different markets. We're in Colorado, Texas, and Nevada now. I'm willing to get on a plane to go to our other offices. If you're not willing to get on a plane to go visit your team, like, don't expand market, right? I think the biggest determining factor, though, is culture. So as brokers, we're not really involved in the integration aspect. That's kind of where we lose touch. But businesses do get brought back to us where the integration didn't go well and we have to resell them.
I want to help a beginner who's listening to this, because I know I have some beginners. Let me show you just some silly numbers, right? You decide that you want to buy a business today and you have no money in the bank, but you can do this, right? It's an industry you can do. And you contact Jessica and you go to, what's your website, Jessica? It's a cheeky plug.
Yeah. tworldcolorado.com or tworlddfw.com.
Okay, so tworlddfw.com, because we're Texas-based, probably more Texas listeners. tworlddfw.com, and you see a business and it's $660,000 is the annual revenue. The price is $330,000. To show you just numbers that we've discussed about on the show. You don't have a deposit, you don't have any money, but you go to the SBA and you get them to agree to give you an SBA loan for as much of it as possible, and they're willing to do that, and so you get 80% covered by a loan, providing you can put down a 20% down payment. The seller has agreed to give you a 10% down payment in seller financing, so you now only need 10% in cash, which is $33,000. And if you don't have $33,000, you have a number of options available to you. The easiest one, as far as I'm concerned, would be to find a business mentor who you trust and ask them, if, like, family member, if they will gift you $33,000 in exchange for 10% ownership of the business. You now have the first member of your board of advisors who is a successful business owner, is a friend of yours, someone you know. They didn't give you $33,000. They purchased 10% of a business for $33,000. You effectively now own the business and didn't pay anything. You've got repayments to pay, but if you've calculated correctly, you should be able to pay it out of the business, and you've got a very smart person guiding you through. That would be a method that would work. Anybody here listening could buy a business at the average price of a company, which is phenomenal. And I highly recommend you will go and see Jessica's website. Are you on social, Jessica? Or is it
I am.
private?
Yep. Yeah. I'm just at Jessica Fialkovich. I'm the only Jessica Fialkovich. So if you even spell it wrong, I think I still come up.